E-commerce was only about half the size it is now. FedEx and UPS are expected to see single-digit increases to their volume despite the smaller window, while the post office is forecasted to see a double-digit decline. ShipMatrix says that's largely due to Amazon stepping up its delivery service partner program, those blue trucks that you see around. In-store pickup, that's another trend to watch, as Walmart and Target both say it's a growing part of their business. About 15% of shoppers are expected to try it out this year. It's forecasted to grow to 25%, 1 out of 4 shoppers in 2020. Back over to you.
Frank, thank you very much for that. Frank Collin back at HQ. Now, stocks, as we mentioned, trading low throughout today's session. We're off the session lows, but still down just over 200 points again now on the Dow. For more, let's bring in Jeff Sott from Capital Wealth Planning. Paul Hickey still with us, of course, as well. Jeff, starting with you, I mean, clearly a lot of these discussion points where it's consumer related, a lot of good activity still going on. The data we saw this morning on the manufacturing side, pretty disappointing. As long as the negative data is confined to manufacturing, do you think the market can keep going higher?
I do. I think you're getting an early Christmas gift with this sell-off right here on Friday and today. It may extend into the middle of this week. But the old stock market saw is if Santa fails to call, the bears will roam on Broad and Wall. It didn't play last year. You'll recall that retail sales were actually hurt a little bit with the 20% decline from October into, we actually identified that decline in early October, as well as the bottom in late December. I think you're going to get better than expected retail sales because you're not getting a 20% decline in the equity markets.
Paul, you think that small caps are the ones to watch here, that they're overdue for a catch-up?
Yeah, they've lagged for a while here. We're starting to see better performance from the small caps. Just today, in prior days when you see doubts about trade or China-related headlines, small caps get killed relative to large caps. Today, they're underperforming by a little bit, but lately when we've seen these trade headlines come up the last few days, small caps haven't been as poorly hurt. Their relative strength has also started to show a turn here. So I think if we do start to see, manufacturing, notwithstanding today's weak ISM manufacturing, we think it's going to stabilize at least at these current levels, and I think that'll be good for the small cap space in general.
The Russell 2000 had what they call a golden cross 2 weeks ago on November 5th, where the 50-day crossed above the 200-day. And if you look at the flow of funds going into the retail sector, I think the small cap stocks have a lot more to run here.
In terms of the broader trade headlines that you both mentioned, I mean, clearly we haven't had incrementally positive headlines over the last couple of days or the last week, but provided the December 15th tariffs don't go to effect, we get confirmation that they're going to get delayed. Does it matter if phase 1 is signed? Can the market rally in December in that scenario, Jeff?
I think it can. I think that the trade talks with China have hit a stall because of the bill that was signed, the Human Rights Bill. I lived in D.C. I'm still pretty connected in the D.C. Beltway. And I'm not sure whether the trade tariffs are going to go into effect or not, but I don't think there's going to be a phase 1 this year.
Paul, in fact, when you're talking about the small cap stocks, you're saying that it's important that they start discounting these trade headlines, but why would they?
Well, so, I mean, throughout this entire period, the small caps have been, disproportionately negatively impacted by any day there's been over the past 18 months.
So why would that change now? Why would the market start discounting now?
Well, I think you're starting to see the market maybe sense that, we're at a level where things aren't going to get any worse. Maybe we will see a delay in the December 15th headlines. And to Jeff's point earlier about, say, a golden cross for the Russell 2000, normally in most cases a golden cross, that formation doesn't really have a lot of predictability. In the case of the small caps, though, I mean, a year following, it's much better than average returns for small caps. Gains, I think, 80% of the time over the next year.
Jeff, you said you've got an early Christmas present and a buying opportunity with the pullback. Where would you put money to work for the short-term investor, just looking for the rest of this year?
I still like technology, and I like financials. I think financials are cheap, and my father used to tell me good things tend to happen to cheap stocks. I like the energy complex. It's only up 5% on the year, according to the S&P 500 energy component. I particularly like believe it or not, the midstream master limited partnerships. And I think the small caps are getting a January effect in December.
And Paul, for you, are you looking for particular stocks that might go on your tax loss bounce list?
I think we haven't really been playing that angle particularly much, but I think on the course of getting to a sector basis, I would agree with Jeff on financials. I think the financial sector, we've been seeing much better performance from these names in the internals, and the large cap financials after the big banks this earnings season really broke out of what have been like multi-year consolidation phases. They have the room to raise their dividend payments. They have better than average yields already, and they have the ability and the green light, so to speak, from the Fed to incrementally raise those dividend yields.
Jeff Sott, thanks so much for joining us.
Pleasure.
Good to see you as always. We're down 224 points on the Dow. Just a little bit more selling in the last 10 minutes since the show started, but still off the lows, which was down 254 points. Still ahead, it's a down day for stocks, as just discussed, but Roku has been hit particularly hard on the back of a downgrade from Morgan Stanley. We'll tell you what's behind that warning.
And after the break, the S&P 500 on pace for its worst day since early October. Mike Sanjoli heads to the telestrator with a look at the key trend lines to watch. And take a look at our data tracker. The ISM Manufacturing Index missing estimates in November with a reading of 48.1. Construction spending also missing the mark, falling 0.8% in October versus estimates of a rise of 0.5%. Closing bell is back right after this break.
This CNBC program is sponsored by SunTrust.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that.
Mind the gap.
We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Ah, Christmas. A time for sharing gifts and laughter. And photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane of the rim, throwing right corner three. Another
TuneIn Premium brings you every minute of the NBA season so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
43 minutes left to go until the closing bell. And as you can see, the Dow's off 0.75%. S&P 500 following suit. You've got the NASDAQ composite that's declined more than a percentage point, as has the Russell 2000.
Let's check in on the markets very quickly, down a full percent, as Contessa just said. Some individual market movers. Take a look at FANG stocks in the sell-off. Facebook, Apple, Amazon, Netflix, Alphabet, all low today as investors sell out of some of the stocks that have been leading the rally. Tech, the second worst performing sector, followed by real estate. On the back of those weak ISM and construction spending numbers, industrial stocks have been hit particularly hard. Shares of Boeing, Honeywell, and UTX all lower by more than 1%.
All right, here we go. And now we have 42 minutes left of trade. Let's send it to Mike Santoli for today's market dashboard. Mike.
Hi, Contessa. Here we go. Indeed. Here's what we have for you. Air is thinner up at these recent heights for the market. I'll take a look at the field position as we pull back a little bit. The slope is steep. That's the slope of decline or expected decline in earnings forecast, but that might not be that big a deal for the market next year. We'll see. Vision is limited. Very hard to predict the stock market, but people try. We'll take a look at the distribution of forecasts for next year. And then insulation is key. The insulation of a very strong wealth effect on consumer spending. So here you go. Here's a one-year chart of the S&P 500. The one-year chart is starting to actually tell a story. You don't have to go back 2 years because we are kind of lapping that big decline that we saw. I'll try to draw some semblance of a trend line, really just to illustrate how we really had kind of stretched to the upper end of this band. A lot of folks would basically say this is the bottom part of this channel that we've been in for a while. So it wouldn't be too surprising when you look at it like this to see the market curling lower, giving back some of those gains. We had basically a full month without a proper pullback. So in this context, not that big a deal. Did want to take a look at the U.S. market against some international indexes as well. This is the S&P 500 just today compared to the all-country world index excluding the U.S. So basically everything but the United States as well as the emerging markets. And you see we do have some outperformance today by the non-U.S. indexes. Now, of course, the data was good in China and Europe coming into this session. The U.S. market, U.S. data was the one that surprised to the downside. But I like to look at this same relationship, these three assets from August 11th. That was basically the low from the late summer sell-off. And what you see is the rest of the world outperformed for much of this period, but now it's basically a dead heat. So you see everything up between 6 and 7%. The rest of the world has kind of come back as the U.S. has essentially sort of caught up by not going down as much in the last few weeks. So a lot of people said, hey, it's a global rally. That's why you can believe it. It's a little bit less of a global rally right now, but I do think you have to give those rest of the world markets some room here because they have come off very dramatically from their lows, guys.
Mike, I guess another key factor to watch from here is whether or not that worsening construction and manufacturing data is just confined to those areas, because the market's kind of already priced that in and expects that. If you've got it spreading out to different parts of the economy, that would be more of a concern for.
Well, it would be more, but also if it extended, because I do think part of the premise of the rebound in cyclical sectors is that the U.S. manufacturing picture was also supposed to be bottoming. So today's number said, hey, that's not really happening on time. But I like to look at the fact that, as you guys have been talking about, the tech stocks have been leading the way lower. You had the NASDAQ underperforming today. That really suggests this is a profit-taking move and not in direct response to some new economic fears coming out of that ISM.
All right, Mike, thank you for that. Now 39 minutes before the bell, and the Dow is off 206 points, 0.75%. The S&P is following suit as well, down now 0.7%. After the break, analysts at Citigroup say they're getting more bullish on cigarette companies amid the crackdown on vaping. We'll tell you which name they say to buy now.
And later, Goldman Sachs could be on the verge of a major shift in the way it sets financial targets, but some shareholders may be disappointed by the change. We'll explain.
Ah, Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Towards right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Time now to get to the word on the street. Bank of America downgrading Deere to underperform, lowering its price target on the stock to $150 a share from $175. The firm cites disappointing earnings outlook and thinks the setup on agriculture into next year is very challenging. And Citigroup has a note on tobacco stocks, upgrading Altria to buy, cutting Philip Morris to neutral. The firm says the disruption in tobacco thesis now looks hard to sustain as vaping appears to have stopped growing in the U.S.
And Roku sinking today. Morgan Stanley downgrading the stock to underweight, saying it's all priced in. Morgan Stanley says while Roku continues to execute a sound strategy, revenue and growth profit could slow meaningfully in 2020. Revenue growth in particular, they're focused on, and margins. Not quite sure about the wording there, my apologies. This is, though, a downgrade in rating, but an upgrade in price target, which screams they're late and they're being weak. Better late than never, you could argue, but either way, you've got to call them out when that's the case. They talk about EV to sales multiple, Paul, of 3 times that of Netflix's, and the very fact, as I just said, that growth rate and margin kind of justified that for a period, but as those slow, it puts it more in focus, and that's the reason for their downgrade.
I think right now you look at a stock like Roku, it's pure momentum either direction, and it's hard to, buy or sell the stock based on a valuation call. I mean, it's overvalued, so to speak. But going forward, you look at it like when people, the issue in a sell-off like today is, can you say, oh, it's at an attractive valuation right now? Because they don't really have much in the way of earnings to speak of. So it's, where does the support come in? You have to look to the charts here. But these kind of stocks are, when they go up like crazy as Roku did. And when they go down, there doesn't seem to be much of a bottom for it.
Well, down 14% on the day. Is this a good entry point for you?
I think Roku is a very interesting product, but there is going to be a lot of competition down the line. It's not a name we're involved in. And I mean, I would rather stick with some of the more established players in streaming, like, say, a Disney, so to speak.
Roku's still up 350% year to date. We've got 34 minutes left of the session. The Dow's down 240 points, so we're slipping back towards the session lows, which were down 254. Coming up, we've got your last chance trade. Paul's looking at a 5G play. We'll reveal that call ahead.
Plus, Apple gearing up for an event next hour here in New York City focused on its favorite apps and games of 2019. We'll preview what to expect in today's market zone. As we head to break, here's a check on bonds. Treasury yields getting a boost to start the month. The 10-year currently yielding about 1.83%. Closing bell, will be right back.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
Ah, Christmas. A time for sharing gifts and laughter. And photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back in the end zone, Snead. Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round 10. Back shoulder fade for Perry in the end zone. Caught it! Touchdown!
Upgrade today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
Welcome back to the closing bell. We've got 30 minutes left of the session. As you can see, quite a lot of selling, though, putting in perspective, we had a 3.5% increase for the month of November, down a full percent for the NASDAQ as we stand.
Here are the three things driving the action now. U.S. factory activity and construction spending unexpectedly fell in November, raising concerns yet again about the strength of the U.S. economy. President Trump announced surprise tariffs on steel and aluminum imports from Brazil and Argentina. And speaking of trade, the president declines to provide more details on the negotiations with China. He says, quote, we'll see what happens.
Time now for a CNBC News Update with Sue Herrera. Hi, Sue.
Hello, Will. Hello, everybody. Here's what's happening at this hour. A developing story out of the UK. British police launching a murder investigation into a car crash that killed a 12-year-old boy. But that car also struck children near a high school in Essex, northeast of London. 5 other people were hurt. A nor'easter is intensifying in the northeast this hour. It's expected to dump up to 1.5 feet of snow from Pennsylvania to Maine. The storm is snarling air traffic around the country. FlightAware now reporting about 650 flights in and out of the U.S. have been canceled so far today. Almost 3,800 are delayed. Senator Cory Booker officially filing for South Carolina's Democratic presidential primary. He's been trailing in the polls. The contest is on Saturday, February 29th. And Michigan is now the first Midwestern state to permit recreational marijuana sales. Anyone 21 years and older can now buy weed. You are up to date. That's the news update this hour. Contessa, back to you.
All right, Sue, thank you for that. Let's send it over to Mike Santoli now for the second installment of the Market Dashboard. Mike.
Contessa, we're tracking the slope of earnings forecast, and it's pretty steep on a typical basis, and probably will be next year as well. So this chart of 2020 earnings forecast for the S&P 500 coming out of Credit Suisse, it shows you what's happened so far to the estimates for next year. They've come down from about 12% to around, let's say, 9% right now. Now, the rest of this chart shows that historically, if it follows the path it typically does, it's going to continue going down for several months, and probably settle around 4% growth. Now, that would be 4% growth on top of minimal growth right now. This has been the decline in the past few months of 2019 earnings forecast. The question is, can the market support the current valuations if indeed we do have this degradation of profit expectations going into next year? 4% growth, already at a relatively high forward multiple for the S&P 500, would probably mean interest rates would have to stay where we are. We'd have to see no prospect of recession, but it would not be out of the realm to actually see the stock market remain pretty well supported, because this is the way it goes late in a bull market. Even small growth in profits, you might privilege the growth stocks that have faster growth, but this in itself doesn't mean that the market is mispriced right now for what we might expect on profits. And of course, I should point out, guys, nothing says we're going to follow this path exactly. There actually are a couple of strategists out there suggesting that the numbers maybe for the second half of next year might even be a little bit low, but of course, that all remains to be seen.
So Mike, as recently as March this year, people still thought we were going to have double-digit earnings growth next year.
For next year. Yeah.
Was part of that based on, at that time, expectation that 2019 would be a bit lower than it's turned out, or all based on being more bullish
because you can
about
see
2020?
right here, at that point, we were thinking that 2019 was going to be a little bit higher. It's pretty much I think it's a fairly standard plug factor that the sell side kind of operates under, where you put in somewhere roughly 10% for a forward-going year. GDP probably was supposed to be higher than we now think it was going to be as well. So I don't think it's that unusual for the street to be kind of chronically over-optimistic the farther out you look. But in this case, it seems like 12% down to 4% does change the equation in terms of what the market is currently valued for.
Okay, Mike, thanks very much for that. See you again in a bit. Goldman Sachs could be on the verge of a major shift in the way it sets financial targets, according to a report in the Financial Times. The Wall Street firm will reportedly avoid setting strict profitability targets at its January Investor Day, opting instead for longer-term, through-the-cycle goals. The FT says part of the Investor Day presentation will be geared at highlighting the bank's core Wall Street businesses, including new funds focused on venture capital, distressed capital, and real estate, while taking attention away from Goldman's consumer banking initiatives, which could take longer to pay off. Shares of Goldman Sachs up about 30% on the year, but still lagging the likes of JP Morgan and Citigroup. I think this is a really interesting article. What is unquestionably true is the importance of their January Investor Day relative to all other typical annual Investor Days. This is a really, really big one for them. They've delayed it already, and certainly share prices will react to that much more so than they have other banks' recent annual Investor Days and Goldman Sachs' own recent Investor Days. As to trying to guess ahead of the Investor Day exactly what they're going to announce, I'm not sure how easy that is to do, but long-term, short-term targets, they're going to be absolutely key for this stock going forward.
Yeah, I mean, obviously, it's going to be an important investor meeting because we're talking about it, months in advance. So
and it's been delayed a number of times.
But
new CEO, new management team.
Yeah, so they've had a lot of transition. I think Goldman's a stock that we like. You just mentioned before that it's lagged its peers year to date. Analysts are generally negative on the stock versus positive. The buy. There's more sells and holds than there are buys, I believe, and the valuation is pretty, attractive relative to its peers. And the consumer side of the business, I don't want to say this is the reason you should go out and buy the stock, but you basically have a cheaper stock than the rest of its peers, and you have almost a free call option on the potential success of the Apple Card, or the Marcus consumer unit. So I think it presents a very nice opportunity, I think, for investors focused on the long term here. And it's a name, like I said, we do like and we own.
I do also think an interesting part of the FT article about wondering whether they're going to try and push the focus on their asset management and their new kind of, or newish foray into private equity and expanding their kind of the investing and lending business. That will be quite interesting, as opposed to necessarily the focus on consumer. But we'll see.
The consumer is years down the road before that's going to impact the bottom line. So you want to focus on more what the bread and butter part of the business right now.
Either way, next week, Tuesday and Wednesday, for the next big update on all of the banks as they go into the new year. Goldman Sachs Financial Services Conference will be the exclusive media presence at it, and hear from a big slew of CEOs and executive leaders, including someone senior from Goldman Sachs, so a little bit of a preview ahead of their own Investor Day in January. We've got 25 minutes left of the session. Here's where we stand: down 0.8% for the Dow, 0.7% for the S&P, a full percent for the Nasdaq and the Russell, of course, coming off the back of strong gains, though, for November. We've got your last chance trade coming up.
Plus, we'll hear from someone who sees a distressing sign on Wall Street for investors. Give you more details later on in Closing Bell.
CNBC Sector Sword is sponsored by Sector Spider ETFs.
Sector Spider ETFs. Visit us on the web at sectorspiders.com.
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the Mega Plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free, selected stores while stocks last, ends 1st of January.
Christmas isn't just about the turkey, you know. At Asda, we've a whole range of delicious joints to bring the family together, like our Butcher's Selection pork loin at just £3.97 per kilo, and our Butcher's Selection beef joint at £4.97 per kilo. So, who's on carving duty? Asda, let's make Christmas extra special. Selected stores subject to availability.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown to Keenan.
Search NFL today.
In the stock market and in life, everything can change from one minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen. Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
The session, time for your last chance trade. Paul, what do you got more?
Well, so this is going into the next year and years after that, for that matter. 2 biggest themes in technology are 5G and 3D sensing, I think. Two very big themes. And one stock that really is positioned well in both technologies is Viavi. It was spun out of JDSU, which anyone that's been around since 99-2000 remembers that company, which was one of the darlings of the dot-com boom and bust. This company was spun out of JDSU in 2015, and on the 5G, they were leaders on the testing of 5G systems, and they've made some acquisitions now, and so that now they've expanded to field testing. So as these 5G systems are deployed, they'll have more of revenue stream in that business there. And so, I mean, that's years next year big, and I think the years after that, once those systems come out in the field. The second on the 3D sensing is just like on your iPhone, when you look at your iPhone and unlocks your iPhone. The next model of the iPhone is potentially going to have 2, so a front and forward-facing facial recognition. So that's just going to double the amount of filters they put in.
And Viavi makes those for the iPhone?
So they make it. So 3D sensing, there's competition in the chips, but they make the filters involved in it, and there's not a lot of competition there. They pretty much own the space. And just not even on the phones, but in the automotive sector, in the car going down, this is, it's already starting in higher end models, but sensing of the driver, whether the driver's getting tired or,
so lots of other applications other than just in your phone.
Even in the exterior. So once 5G comes in, these 3D sensing technologies are going to take off, and then you have this autonomous driving, and that's another application they're involved in.
Thank you for that. Okay, so we have some news on trade right now. Let's get to Washington, D.C. Kayla Tausche has more details. Hi, Kayla, what are you learning?
Hey, Contessa, Republican Senator Chuck Grassley, who chairs the Finance Committee, which has trade oversight, has just made some comments on the Senate floor about the narrowing window to pass the new NAFTA this year. Listen.
If a deal cannot be reached by the end of this week, I do not see how the USMCA can be ratified in the year we're in.
That is increasingly becoming the conventional wisdom here in Washington. There are just 8 legislative days left this year on Capitol Hill. And here's what has to happen for USMCA to actually be passed. First, you have to have a handshake deal between the House Democrats and USTR. That could happen by the end of this week. Then Mexico and Canada have to agree with some edits that the U.S. makes to the deal. Then the White House will send the bill to the Capitol, which triggers a countdown for a vote. And then Speaker Pelosi and Leader McConnell will have to schedule those votes. That is a lot to happen with government funding expiring and an impeachment inquiry growing by the day. So certainly a lot to get done. And you can see why Senator Grassley was potentially pessimistic there with how much has to be done and how little time there is.
Kayla, thank you very much for that update. The market not really moving off the back of it. We're still down 200 or so points on the Dow, about 0.7, 0.8%. NASDAQ and Russell down just shy of 1%. Here, coming up, we will go inside the market zone. Uninterrupted coverage of the last minutes of trading. We're back in a couple.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Dead of night. On a break with the lads. Excavators turned off. Everything's silent again. Amber still flashing on dark buildings. Hot tarmac steaming. Having a laugh whilst everyone else sleeps. Deadline looming. Sun won't be long. Foreman pacing. Hot Mackie D's. Back to work.
Over 700 McDonald's open 24 hours. We are awake. Ah, Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back of the end zone, Snead. Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round 10. Back shoulder fade for Harry in the end zone. Caught it! Touchdown!
Upgrade today.
To LeBron, slam dunk.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. Kawhi Leonard and the Clippers are in Milwaukee to take on Giannis and the Bucks.
Hart pulls back, trying to make it 11-2.
Kawhi Leonard is all over the place. This Friday, the LA Clippers are at the Milwaukee Bucks. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
This week on the New Yorker Radio Hour, the actor Billy Porter talks about the hard years before the acclaim.
I had just gone through way too many almosts because I was too gay or too black or not urban enough. Like, oh, you're just so special. And it's like you hear that so often. It's like special doesn't pay the bills.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
With 13 minutes left in the trading day, we're now in the closing bell market zone. Commercial-free coverage of all of the action as we head into the close.
CNBC senior markets commentator Mike Santoli is here to break down these crucial moments of the trading day. And we have Bespoke's Paul Hickey with us as well. Roku, one of the biggest percentage decliners on Wall Street today. Julia Borston has those details. Julia?
Well, Contessa, Morgan Stanley downgrading Roku to underweight from in line. That's sending the stock plummeting down about 14%, though it's worth, now it's down almost 15%. Though it's worth noting the stock is still up about 350% year to date. Morgan Stanley writing, quote, "We believe there are risks to growth expectations not reflected in current valuation levels. Specifically, we think revenue and gross profit growth may slow meaningfully in 2020. But it's worth noting overall Wall Street is still bullish on Roku. According to FactSet, there are 13 buy ratings, 2 holds, and 3 sells. Guys, back to you.
Julia, thanks so much for that. Mike, we discussed this one a little bit earlier. I mean, if you read through the note, the bit where I would say, having read a lot of Roku notes over the last year, they are a little more bearish than others on. It's actually the sales of the hardware as opposed to the advertising growth, which is the more sexy bit, the latter part, that people tend to sort of pay up for in other bullish notes.
Right. No, that's for sure. I mean, I think the real takeaway is that when you have a valuation on a stock like this that's addressing this very large, fast-growing area, the valuation is incredibly sensitive to slight changes in the pacing of how long it's going to take to get big and to capitalize on that opportunity. So if you just say it's going to slow down a little bit on this business line or that's the kind of reaction you get, 15% down.
But when you look at where Roku has room to grow, do you see the advertising part of this being a significant piece of the action?
Yeah, I mean, I think down the road that's an avenue they can really exploit here. And to Will's point, and I mean, the whole streaming, it's still such in flux now, the whole sector. Yeah. And I think there's a lot of uncertainty. So to even say to model out, any sort of financial targets 4 or 5 years from now, I mean, nobody knows how it's going to play out at this point.
Another reminder, downgraded the rating, upgraded their price target, often a sign that they were late to the recent run-up as opposed to necessarily forecasting an upcoming pullback, though today clearly reacting to the downside. The largest online shopping day of the year is in full swing today, and retailers expected to rake in a record-breaking $9.5 billion. But some investors are betting there will be some losers this holiday season, according to data from S3 Partners. There are twice the number of short positions in the Spider Retail ETF as this time last year. Short sellers are targeting bricks and mortar stores, wagering over $7 billion against retailers like Macy's, Kohl's, and Nordstrom. Again, to hear that there's a lot of short positions, Mike, in some of these stocks isn't that much of a surprise. No. It's kind of already factored in, one would argue.
I think a lot of hedge funds, a lot of traders think of them as structural shorts. This is not a call about the consumer or the shopping season right now. It's really about just badly positioned companies for the long term. It doesn't mean they're all going to be right or that they're not going to have massive rallies that's going to make those short positions painful for a while. But I don't think it's really about a cyclically sensitive bet that they're making.
Macau's casinos saw gaming revenues drop in November by 8.5%, and that slightly beat expectations, which were lower in part because of sluggish VIP visitation, Hong Kong protests, crackdowns on junkets, and the slowing Chinese economy. It is the second straight month of declines, and Stifel is warning that December is likely to be the third against a tough 17% comp from last year. Visa restrictions around Macau's 20th anniversary are also due to kick in December. Stifel expects the declines this month between 10 and 12%. As you can see, Wynn is down 1% on the day. Las Vegas Sands roughly flat. Melco, though, got a bit of a bounce on that, and MGM is flat as well. Las Vegas Sands is the one that Stifel, among others, wants to watch because of their exposure to the mass market there, where VIP continues to be under pressure. And in fact, consensus on the street next year calls for VIP to decline 15% and mass market to grow 15% and or 10% rather. So we're seeing this big switch, and Las Vegas Sands has more exposure to the mass market there.
Well, I was going to say, I just wonder, I mean, are the declines in visitation to Hong Kong fully factored into the market expectations?
Look, what you hear from the company, and we heard this from the earnings calls from Las Vegas Sands and from Wynn specifically, is that, hey, the airport stayed open, people were still coming here, but we did see the VIP numbers, visitation numbers, dampen somewhat, and that there's been concern. And if you look at a front page story in the Wall Street Journal about the numbers in Disneyland, Hong Kong, it's clear that the Hong Kong protests are having an impact on leisure travel.
Went down about 1% or so today. Now, Chinese telecom company Huawei outgrowing its reliance on U.S. tech, despite U.S. companies receiving permission from Washington to resume doing business with Huawei last month. The company's latest smartphone contained no US-made parts, according to an analysis done by UBS. Huawei's older phone models have traditionally relied on US chip makers like Qorvo, Skyworks, and Broadcom to supply parts for its phones. Its latest model replaces some US-made chips with parts from Dutch chip maker NXP Semi, which is down today about 0.6%. Paul, clearly, the debate on trade has always been how quickly can US manufacturers shift their production. Huawei showing that they can be fairly nimble in the opposite direction.
That's exactly my point. Yeah, so I mean, the longer this takes to play out, the more companies on both sides are going to, make adjustments to their manufacturing processes. So, I mean, it certainly helps. It may be hurting China that U.S. manufacturers are moving capacity to other countries, but at the same time, it's hurting U.S. semi companies where China has to, make alternate plans for their chips. So it works both ways, and it just goes to show why this uncertainty just puts an overall weight on things, the market and the economy overall, and isn't good for anybody.
U.S. semis as a sector, what do you make of the recent price performance?
So semis are interesting. As we always say, semis are the leading indicator in this century. They're involved in every aspect of technology and even non-tech products that you use. And they've led every sell-off and rally in the market on over the last several years. And what we've actually seen is the semis peaked on a relative basis to the S&P 500 on November 8th, I believe, and they've been lagging for the last couple of weeks now. It's not a major tail off here, but it's something to watch. There's a lot of positives to like about the market, even at this point. But this is one thing where the market's telling us the semis are lagging. They've had a great year, so that may just be some profit taking, but it's something to monitor. And if we start to see a new low in relative strength versus about 2 weeks ago, that would be a worry.
All right, oil is one of the few bright spots on Wall Street today, and Frank Collin has more details there. Hi, Frank.
Hey, Contessa. Big day for oil compared to the broader market. WTI crude up 1.5%, snapping a two-day losing streak. Two factors are boosting oil prices. First, the prospect of further production cuts. The Wall Street Journal reporting that Saudi Arabia will push to extend output cuts through mid-2020. And then second, further evidence of improving economic conditions in China. Factory data surprised to the upside in November. The move higher in crude lifting oil names like Marathon, Exxon, and ConocoPhillips, all up between 1% and 3%. Still, guys, despite these gains today, the energy sector is barely trading in the green for the year. Back over to you.
Frank, thanks so much for that. Mike, I guess nice little jump today, 1.4 in WTI. The Brent itself was low, and it comes off the back of a slide last week in oil prices.
It does.
Either way, whether oil's been strong or weak, energy's just remained unbelievably lackluster throughout the year.
It's been hard to trust any rallies in the energy stocks. It really is. I mean, you could basically say it's just a maximum contrarian point. They're under-owned, they're neglected, nobody likes them, but they don't really act all that well, and there's this kind of longer-term overhang that, lower oil intensity of the overall economy is not helping.
How do you see the broader energy sector?
Yeah, so I mean, it's hard every time you try and take a stand and buy names, it ends up backfiring on investors. But broader term, weaker energy is, keeps inflation levels down. And for the broader market, that is a great thing to see.
Mike, in terms of broader markets today, clearly we have seen a nice move higher in the long end of the yield curve.
Yeah,
though
in yield, yeah.
In yields, 1.82 or something like that on a 10-year. It hasn't inspired much performance, though, from the risk-on sectors like financials.
It hasn't, although in the morning it looked like that's exactly the way it was going to go. It's kind of textbook. The yields are down off the highs of the day, but not much. So I do think it's interesting that yields have kind of held up. It probably also speaks to the idea that the bond market is not taking today's ISM number as a kind of calling off the recovery story for industrial growth. So I think that you can basically say the backdrop is there now. Financials were outperforming, even though they weren't up.
Well, we talked about Goldman earlier. What about the broader space?
We like the financials, but to this market action today, I think it gets to the point where the yields of stocks aren't moving the way they typically do, and I think part of that is just rebalancing at the end of, it's a new month. We had a very strong November in the broader equity market, so people, taking down their weightings as positions get out of whack.
So, Mike, what about market internals?
You know what? Not all that bad considering the headline losses in the indexes. If you look at the advancing and declining stocks on the stock exchange, all right, that's 800 down, 800 up, 2100 down. Clearly negative, but not so lopsided. In fact, if you look at the new 52-week highs and lows earlier today, it actually was unusually strong in terms of the distribution distribution, and you still see more new highs than lows. Now, part of this is you go back 12 months, and you were right in the middle of that December plunge, so you have a little bit of a tailwind to the 52-week clock right there. And then I do want to point out the volatility index, the VIX, which really had deflated below 12 by the middle of last week and has now rebuilt some premium in there. It seems like this trade deadline coming up is going to juice the demand for some downside protection. See it coming off those lows above 15. It starts to suggest maybe we're in for some rougher footing.
I think you said last week above 14. It would suggest
I said 14. I said about 3 or 4 points above the lows is probably. But you're right.
Yeah,
if you
so
get
in
this zone, it's more neutral than it is calm.
I like a range. Yeah.
At the moment, by the way, we should mention down to fresh session lows. The Dow down 260, S&P just above its session lows, but still down 0.8% for both of those indices. 2 minutes left of the session. Let's get to Rick Santelli for an update on bonds. Hey, Rick.
Hi, Wilf. You know, if you look at a November 1st start to 2 year, you can see all the information important to today. We are now at 160, actually down a basis point on the session on 2s. And if you look at the same chart starting November on 10s, look at the right side. It's moving to the upside. It's now up 4 basis points at 182. The curve is steep in 10s to 2s, 5 basis points today, despite weak ISM this morning. And the dollar index, well, a 24-hour chart pretty much shows you everything you need to know. At one point, it was down almost a full half cent, giving up last week's rally. And Bertha, the ISM certainly pulled the rug out of all 3 stock indices, including the NASDAQ.
Yeah, pretty much. We've seen sort of a broad pullback from those record highs last week. Amazon among the worst of the FANG performers today, although Raymond James is fairly bullish, saying that according to Edison Trends data, Amazon spend was up 49% on Thursday and Friday last week. Of course, Walmart was up about 53%. Meantime, Ulta today shaking off Piper Jaffray price target cut. Piper noting that Ulta had really steep promotions, including on Kylie Cosmetics, of about 40%. Over to Bob.
Issue for the day, Bertha. ISM new orders index 4-month low. That implied some weakness in the industrial names, maybe capital spending a little bit weaker than anticipated. We saw industrial names, particularly aerospace names like Northrop Grumman, were notably on the weak side, closing at the lows. On the other side of the ledger, steel stocks like AK Steel, US Steel, Cleveland Cliffs, they all rallied on these renewed steel tariffs on Brazil and Argentina. There's the closing bell. We are closing right at the lows for the day. The Dow Jones Industrial Average down 264 points. S&P just off the early morning lows, down 26.
Welcome to the closing bell. I'm Wilfred Frost.
And I'm Contessa Brewer, in for Sarah Eisen today, along with Mike Santoli, CNBC senior markets commentator.
Let's check in on where the markets closed. As Bob just mentioned session lows at the end of the day. S&P down 0.9%. Dow down a little bit more than that, down 260 points or so. The NASDAQ and the Russell were both down more than 1%. In terms of sectors, consumer staples and energy just eking out slight gains, whereas information technology, industrials, and real estate was all down more than 1%.
Joining us to talk about the market day, Paul Hickey, who's the co-founder of Bespoke Investment Group, still with us, along with Mark Lehman, who's the JMP Securities president. Nice to see you today, Mark. Let's start with you. Does this performance of the markets this first day of December have anything to predict here about the coming month?
Well, you get a little queasy remembering last December, which was a tough time in the marketplace, but I think it's a far different backdrop. I think after what a big rally we've had through October and November, it's not too surprising. We'll see how some numbers come in. We do have some tech stocks that are reporting this week, which will give you some tone. But I expect the market to shake this off and continue its ascent, albeit with difficult days ahead, but more higher than lower.
Mike, do we feel like there's been a significant change in positioning over the course of the last few weeks or month?
Yeah, I think over the last few weeks, for sure. I mean, you go back to September, October, it's pretty clear that investors, professional individuals, were very underexposed to stocks, especially if they were going to be going up. So there was a chase, there was a rebuilding of positions in stocks. I do think you kind of lost that along the way. Starting the last couple of weeks, you've been able to say, okay, sentiment and positioning started to get more aggressive. We are pricing in the good news. I think it became very much consensus that we've certainly avoided near-term recession. The Fed was out of the way, you could tick off the list of things that were going well, including an inflection point for the better in the global economy. And that's why today's data was just a slight challenge to that story in terms of U.S. manufacturing having a shortfall in November. I don't think it changes the overall picture, but it does tell you that a lot of good got priced in over the 10% run from August.
Oh, you're right.
Are we in a pretty steady period here, Paul, or is it going to take something more significant to move the markets in either direction?
I mean, earnings season is behind us. We may have some, economic data that comes up or trade news, but I mean, overall, it's generally a quiet time of the year, and the trend that's been in place usually continues to follow throughout the remainder of the year. As far as sentiment is concerned, Mike's exactly right. Investors were downright negative, both professionally and individually, heading into the new highs we saw last month, but they've come to turn around. But as far as valuations are concerned, tech right now is trading in the 99.6th percentile of valuations over the last 10 years. So basically it hasn't been more expensive at any time in the last 10 years. So that's an area where there may be a little bit of too much enthusiasm, whereas financials we were discussing earlier, their valuations are much more reasonable, under the 50th percentile over the last 10 years. So
I would say, it doesn't seem as if coming into December, if the market continued to melt up by 3%, if the market were flat, if the market gave back 3%, just to say, wouldn't really change the overall story of the year all that much. That's why I think it's a little bit tricky, because you're playing off this idea that you have seasonal tailwinds and valuations, sure, they're rich, but they're not crazy. But within that 3% cone, it doesn't seem as if you changed the conclusion that it was a pretty good year. It seems like the bull market continues, but we have to get it proven by some firming economic conditions.
Mike, to what extent does the data we saw today, stronger Chinese manufacturing than expected, very strong Chinese service data, Europe slightly better manufacturing than expected, but still well below 50, and the US also below 50. To what extent is that an argument to put money to work overseas rather than domestically?
I would support that idea for sure, because the U.S. has been kind of the quality, growth, safe alternative in this world that was struggling to grow. Now, you also had the dollar down pretty appreciably today after that economic data, down, I think, 0.4%. So that gave a little bit of a short-term lift. So I do think that the valuation case has been there for a long time, but I don't know that you can really make a persuasive argument right now that the rest of the world's going to race ahead and the U.S. is not going to also pick up speed. So to me, it's not that clear a case of one being very, very much more attractive than the other.
And the Nasdaq underperformed the major indices, closing more than 1% lower, and tech stocks dragged on the entire market today. But despite tech stocks' sensitivity to trade headlines, Paul's been looking at the FANG names, including Microsoft, and showing how it's made up a large portion of the gains so far in the S&P. I mean, we just talked a little bit about the valuations here. Paul, what's your point here in terms of whether next year we can have gains? These guys need to be involved again?
I mean, it would certainly help. I mean, they're going to have to at least be market performers because they've been so strong. Apple and Microsoft combined have a bigger market cap than the Russell 2000, depending on the day. So, I mean, these two stocks account for a lot of the market. I mean, they're 8%, over 8% of the market cap of the S&P 500. So they're a lot. They're a lot to contend with. But again, their valuations aren't absurd. We're not looking at, this isn't a repeat of 1999 where we had Intel trading over 70 times earnings, Cisco trading over 100 times earnings. So, and stocks like I was mentioning JDSU earlier, which was trading at who knows what. But it was, so I think these names, we need to see companies and sectors pick up the slack, which, as I was saying earlier, I think financials are an area. They're a big sector. They have the market cap weight. They can help pick up the slack if tech does underperform coming into 2020.
All right,
Mark, what's your take in terms of the broader tech valuations and momentum we've seen here today then?
I mean, clearly the leaders of the market have been the names that you just mentioned. I'm not sure that's going to play out in 2020. We've also, and we haven't talked about it here on the show, but we've seen this stealth bull market in life sciences over the last 60 days, with Elizabeth Warren's numbers going down a little bit and less of that fear of drug pricing and other news out of the Democrats. United Health, to name a few, and some biotech stocks. We have 5 biotech stocks up 100% in the last month, and the BTK, the biotech index, is up we're almost triple the overall market since October 1st. I mean, there's a stealth bear market there too, and that's on fundamentals. So that could carry us into 2020. We have JP Morgan conference in early January. I mean, there's good news coming from life sciences as well. So let's not ignore that and assume that the FANG is the only component to take this market higher next year.
Let's get to Bob Pisani now for a look at some of the biggest movers on Wall Street today. Bob, what are you seeing?
Well, the weak ISM numbers, particularly that new orders number, hit industrial names, particularly aerospace names, and the big cap tech names that have had the biggest gains so far this year. So if you look at, you were just talking about that, if you look at the 5 biggest stocks in the S&P 500, Amazon, Microsoft, Apple, you can throw in Google and Facebook. Those 5 are 15 to 16% of the market cap of the S&P 500. All were down rather noticeably today, between 1 and 2%. When those 5 are down that much, the whole market's going to be down. Then you also have the high beta names that will also go down on weak economic numbers. Not the biggest ones, but your Netflix, your Visas, Nvidia, Broadcom, semiconductor names, all big beta names, high beta names. They also were weak today. I think the bottom line, the important thing, manufacturing, a small part of the U.S. economy, the U.S. consumer, still very strong. Back to you.
Is that something that you think a trade deal could change the scenario for, Paul?
I mean, a trade deal will change a lot of the scenarios, and I think it'll improve the backdrop overall. And I think the overall tone is we don't see a recession coming, and the Fed is on hold, if not on vacation, for at least the next 6 months. So in that environment, when you have an economy that's growing, albeit slow, and the Fed on hold, stocks usually go up. I just want to say one other thing. I want to say congratulations to the Nurshell high school football team. They won the state championships, and they lost their head coach a week before the playoffs started. So they won 3 playoff games, no head coach. So congratulations to the Huguenots.
There we go. Paul snuck it in at the end. Congrats indeed to them. And our thanks to Paul and to Mark for joining us today here in the Market Zone. Still ahead here on Closing Bell, Apple getting set to host an event honoring this year's most favorite apps and games. We'll discuss whether Apple's big bet on services is paying off when we return in 90 seconds.
Dana-Farber Cancer Institute
discovered the PD-L1.
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the Mega Plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
At Lidl, we're big on getting in the Christmas spirit. With our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99. And our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Apple holding an event right now celebrating what it calls its favorite apps and games of 2019. It comes as the company shifts further into services with their recent launches of Apple TV and Apple Arcade. No new product announcements expected. For more, let's bring in Nilay Patel, editor-in-chief at The Verge, and Ross Gerber Kawasaki, CEO and president and Apple shareholder. So what do you think here, Nilay? Are you excited about a best of apps event?
I think the important thing to note is that only Apple can get away with holding an entire event in New York, having the developers come in, treating it like the mini Oscars. Their App Store is an incredible moat for that company. It's hard to think of another company that would celebrate its ecosystem in this way.
Ross, what do you think? When you're looking at apps as part of Apple's bottom line, does it matter to you that they are continuing to celebrate them and lift them up and put them on a big platform under a global spotlight?
Oh, I mean, I think they need to do this because it's a monopoly that's charging a huge tariff to do business through Apple. And So they need to justify that with the app developers. And this isn't just about placating them. You know, this is very common in business. You give out lots of awards to people. People love awards. They can market that they've gotten awards, but it's really just a way to try to show the developers like, hey, we're doing stuff for you because we're making so much money off of you, and we really aren't very good at making content ourselves.
Is that likely to make a difference to the developers who are forking over those big fees?
No, I think that they're very unhappy with paying 30%. You know, it's a very high price to pay, and Apple has monopoly, and the government's looking at it. So Apple's trying to reinvest now into its artists by having live streaming events like in music, but also in gaming and other apps, and try to show the developers, hey, here's how we're spending money to help you, and by being on our ecosystem, here's the value. So I get what Apple's doing.
What do you think so far of the new services? I mean, the gaming app and the music streaming, and you've got Apple Plus TV now trying to shell out new programming, original programming.
I mean, this is what people have their phones for, is to use apps, play games, and watch TV. Apple's trying to fill in all those boxes for you. I think you look at other competitive app stores, particularly in games, you see those fees dropping, right? The Steam store is dropping its fees. The Epic store is dropping its fees. They're competing for developers inside of those ecosystems.
But does that matter if people are buying iPhones and they're using their iPhones to get onto these platforms?
I think it does matter. I think once you have a significant investment in apps, your chance of switching to Android is much, much lower. But you look at what Apple's doing in games in particular, their highest revenue line from service fees for that 30% is in-app purchases in games. Now they're starting to pay developers directly for their Apple Arcade subscription service, which creates another sort of virtuous cycle for them to make developers happy, customers happy.
Now, if we snapshot 5 years ago, 10 years ago, the advantage that the iPhone had of just having the best ecosystem that people got hooked to once they used it once, the idea being that they'd never change from it being on an iPhone. Is that still as strong a pull as it used to be?
I think so, but I think the strongest piece of that ecosystem is iMessage. I think if you are a normal person, the stats say that normal people download 0 apps a month. Once you've got your set of apps, most of them are free. Your social network apps.
iMessage is pretty basic.
iMessage is incredibly sticky in the United States. If you look at a company if you look at a country like China, where it uses a different messaging service, there's actually a lot more volatility in people switching platforms. Here, you want those blue bubbles, you don't leave. That's Apple's big moat. The apps, I think, are what makes the platform rich, but what keeps people on the platform is almost certainly iMessage in the United States.
And yet, Ross, you think that all these new offerings are kind of a fail.
Well, I think Apple's offerings are a fail. You know, they had basically nobody sign up for news. I think nobody signed up for arcade. Apple TV shows are weak. So, you know, the bottom line is that Apple needs these outside developers. My kids are downloading apps like NBA 2K from Take-Two and playing these. And Neil's right. These in-app purchases are driving so much of their sales. And so they want to keep that ecosystem robust with lots of developers and keep those developers happy because he's right. You know, if you have a green bubble instead of a blue bubble on your phone, like my friends wouldn't even talk to you. So it's like, you know, that ecosystem is Apple's bread and butter.
Yeah, or you just use WhatsApp, which has never been something that people here use that much for some reason. But Ross, everyone outside of America. Ross, to what extent does it not matter, though, that they do have these outside developers coming to them and they do take 20 to 30% of those revenues? So even if the innovation is coming from someone else, the fact that today's launch really shows is they're still bringing the best. They can still offer the best, and they can still take a margin from it.
That's right, and that's why we own Apple, and we're not selling Apple. But if you notice, they're selling a lot of phones and a lot of headsets, and that's what's driving the stock, not per se services.
You know, I agree with what you said about how only Apple could kind of pull this off, but I wonder if there's a little bit of an expiration date on this. In other words, yes, we're in the habit of anytime Apple says get together for an event, people show up because of the iPhone buzz and the idea that you were going to see something new. Do you think that this is going to just actually be something annually that people say, sure, let's go for it?
I think Ross is correct in saying people like awards. They were not making a big deal out of this. This event kind of leaked a little bit early. I think they wanted to have some press there. There's a lot of very happy app developers in New York City who are going to get feted today and, you know, go out and have some drinks and be happy about their experience. That flywheel of the most innovative stuff happens on the iPhone is something they have to keep up. Yeah. Whether that has an immediate impact on their sales or their bottom line, I think it's pretty hazy. But if you don't have developers pushing the boundary of what that camera can do, if you don't have game developers pushing the boundary of what the hardware can do, eventually the platform does commoditize.
Well, it has a very late embargo tonight, and no cameras are allowed in the event. So we have to wait until tomorrow to find out who won.
Well, hopefully there's an open bar.
Yeah, I mean, great for the people who are
I'm
there.
sure
but
there
for
will
everybody
be.
Else,
I'm
not
sure.
great. Yeah, right. All right, Ross, thank you very much. Nilay, thank you as well.
We're just going to do some breaking news on Wells Fargo that came out during that interview. They have appointed their new president and CEO, Scott Powell, Chief Operating Officer, will report directly to Charlie Scharf, of course, the new CEO who took the reins just a few weeks ago. Powell most recently was CEO of Santander Holdings USA and previously had been involved with Santander Consumer. So again, Charlie Scharf just shuffling the pack a little bit underneath him. The other most high-profile appointment he made was in the Government and Public Affairs Department, where they appointed Mr. Daley, a former member of staff for Barack Obama. And clearly the big focus for Charlie Scharf remains one of getting the Fed asset cap lifted, so it'll be public policy and regulatory related to begin with, and I guess Mr. Powell coming in to run the bank in the meantime. The only other point I'd add, guys, on this, I mean, not seeing the stock really move off the back of it, a bit of a blow to Mary Mack, you would say, who was head of consumer and seen as a potential successor when Tim Sloan was still in place, when it could have been someone internal. Of course, once Tim Sloan decided to retire, they made a very clear point that they'd go for someone external to try and help with the kind of public image of all of this. Therefore, Mary Mack, you would have thought, might have got this promotion. She hasn't got it. So we'll just have to see what happens there. But she still, of course, has a significantly powerful position nonetheless. Wells Fargo stock about 0.1% after hours trade. Up next, 2020 targets. Wall Street's S&P forecasts for next year are coming in, and their expectations could surprise you. Mike will explain that at the Telestrator.
And later, Jack Dorsey's leaving on a jet plane. The Twitter and Square exec is gearing up for a big move to Africa. We'll discuss what that could mean for his companies and for Toto when Closing Bell returns.
Okay. I used to be a bit of a rubbish sleeper. I'd toss and turn all night, and somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here, testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk. This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010? Tesco, delivering Christmas for 100 years. Cheapest item free selected stores while stocks last. Ends 1st of January.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back of the end zone, Snead! Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round 10. Back shoulder fade for Harry in the end zone. Caught it! Touchdown!
Upgrade today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Why do some leaders inspire action when others don't?
The best leaders are actually the best followers because they don't see themselves as the thing to be followed. They actually see themselves as following a cause bigger than themselves.
I'm Guy Raz. How leaders inspire movements for change. That's next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Well, how's this for a kickoff to December? The Dow closed down 268 points. The S&P 500 posted its biggest decline in nearly 2 months, and the NASDAQ and the Russell 2000 were off by more than 1% on the day as well.
Let's get over to Mike for the third installment of today's dashboard. Mike.
Well, vision is always limited looking out a year in terms of what's happening in the markets, but this is the season where strategists basically have to put out a forecast. So here's a little bit of a spray chart. The Wall Street Journal put this together. It's not comprehensive, but these are some of the year-ahead targets for the S&P 500 from various investment banks right now. You see it at the moment anyway from the major firms, topping out around 3,400 for the S&P. I do see some other firms with maybe a 35 out there, but also you have at least one firm or a couple firms saying essentially we already overshot where we might be last year, and then a lot in the middle. I would say just as a sentiment read, this is relatively constructive. You don't see a lot of outright aggressive bullishness out there. Obviously, 3,400 is less than a 10% gain from here. So normally I think you're going to have some estimates coming in there that are going to be at least for a 15% gain. But I did like this kind of selection of methods from Lori Calvasina over at RBC saying, look, if you looked at what the target would be if, in fact, we got to a normal level or a typical level for various different gauges of valuation and other conditions like dividend yield, 3706 basically tells you if we were to normalize dividend yield relative to other things like bond yields. So a strong GDP scenario gets you to, I think that's supposed to be 3433, not 4433. But nonetheless, what it basically tells you is this: it's always a mosaic of various factors that go into it. She gets to a 3350 forecast. That's 7% or something like that, roughly in the historical range. So I do think that it makes sense to think of things as this kind of spectrum of probabilities. There's lots of ways to cut it, and nobody knows exactly what's going to happen, guys.
I mean, Mike, I like the Lori Calvasina analysis as well, and you are reminded the key one there on the left, the most bullish dividend yield, relative, of course, to where bond yields are. It brings you back to that point of the Tina, there is no alternative. Right. If you focus on that, you can be very bullish on stocks.
This market has been relentlessly in search of cash flows, cash yield. If you looked at buyback plus dividend yield, as you always point out, well, U.S. stocks, big cap stocks are basically the destination. We'll see if that lasts.
Mike, thank you.
Well, President Trump has just sent out a tweet blaming Fed Chairman Jay Powell for the weak ISM data. He tweeted, manufacturers are being held back by the strong dollar, which is being propped up by the ridiculous policies of the Federal Reserve, which has called interest rates and quantitative tightening wrong from the first days of Jay Powell.
I mean, interesting point, of course, on the dollar, 97.8 on the dollar index, down 0.4% today, and not at the highs of the year, Mike. It's not been a weak period, of course, for the dollar, but still not the highs. And some comments earlier in terms of the new steel tariffs on the likes of Argentina. Again, we always highlight it. Of course, their currency is a hell of a lot weaker. It's not intentional, and it comes with all sorts of aggressive negative baggage. But it's a theme we've seen of some time. And the important point, I guess, we'd make is whether the Fed has been influenced by this type of tweeting or not. The Fed has pivoted significantly from where it was 12 months ago.
And you would point out, actually, more recently even, that Jay Powell emphasizing the undershoot of the Fed's inflation target as a reason to stay more easy. Those are the things you would say if you were trying to build a rationale for remaining more dovish than you otherwise would or have been. That being said, the idea that U.S. exporters or the U.S. economy is very dependent on the dollar price of our exports is really an antiquated idea. It's just not the case.
All right, up next, home prices on the rise. We'll hear from the CEO of one of the country's biggest mortgage lenders about the state of the housing market. Ahead on Closing Bell.
Given at Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night, and somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here, testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Hello, I'm Jo Brand. When I see people homeless over Christmas, I find it really upsetting. Whether they're sleeping in doorways, on buses, or in hostels, it just shouldn't be happening. But it doesn't have to be like this. This Christmas, crisis centres across Britain are providing warmth and safety, plus long-term support to find people a job and a home. Please reserve a place for someone at Crisis this Christmas for just £28.87. Go to crisis.org.uk now. Thank you.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010? Tesco, delivering Christmas for 100 years. Cheapest item free, selected stores while stocks last, ends 1st of January.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back of the end zone, Snead! Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round left. Back shoulder fade for Harry in the end zone. Caught it! Touchdown!
Upgrade today. Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
Let's get a CNBC News update now from Sue Herrera. Hi, Sue.
Hello, Contessa. Hello, everyone. Here's what's happening at this hour. Flight cancellations are climbing as winter weather slams into the Northeast. FlightAware is now reporting more than 700 flights are canceled at U.S. airports, and almost 4,500 flights are delayed. Heavier bands of snow are expected to move into the New York City area right around rush hour. FAA Chief Steve Dixon will testify before a House panel next week on his agency's review of the grounded Boeing 737 MAX. It was involved in 2 fatal crashes in 5 months. The hearing takes place on Wednesday, December 11th. For the first time in almost a decade, the Supreme Court is considering whether to dismiss a gun rights case. The case involves a dispute over restrictions on transporting licensed, locked, and unloaded guns outside New York City limits. It could have major implications for gun rights nationwide. And soccer player Megan Rapinoe winning soccer's most prestigious award today, the Women's Ballon d'Or Award. She led the U.S. this year, as you probably know, to a record-extending 4th World Cup title in France. You are up to date. That's the news update this hour. And Wilf, I should note that England International's Lucy Bronze came in 2nd. So there you go.
Oh, there we go. That is good to know.
Yeah.
We didn't even come in 2nd in the World Cup. I think we came 3rd or 4th. But anyway, we definitely went out at the semi-final stage.
Absolutely.
Thanks
and she was a fantastic player.
Sue, thanks so much.
You got it.
Rubbing it in there. No, you weren't. You were
No,
actually
no,
pointing
no.
out. We did well. I know. Sue, thank you. Housing stocks taking a leg lower today with the home construction ETF falling for the 3rd straight day. However, recent housing data beat expectations with October new home sales up more than 31% from 1 year ago and total mortgage application volume up 153% from a year ago. Joining us now, Sanjeev Das, CEO of Caliber Home Loans, which is one of the biggest mortgage lenders in the US. Thanks so much for joining us. Good to see you.
Good to see you too.
So talk to us about the pace of growth you guys have seen personally and where you think it's coming from relative to the traditional players.
Sure. Well, Caliber's in staggering growth in the last quarter. I think Q3 to Q2 we grew about 70%. But just to give you a sense of the growth, about 6 months ago we do about $3.5 billion of mortgages a month. We are now doing $7 billion of mortgages a month. We'll probably end up doing about $60 billion of mortgages a month in a year.
I guess I know correlation is not the same thing as causation, but you're growing incredibly fast, late in the economic cycle, perhaps at a time when the traditional banks are deciding to pause. They may be making that decision for risk reasons. You might not be taking on more risk, but do you How do you respond to people that suggest you might be taking a lot of risk late in the cycle when others aren't prepared to do so?
Well, actually, we are not. It seems like what is actually driving the growth in this cycle, so late in the cycle, is the fall in interest rates. And so what the fall in interest rates...
But nobody else is growing, doubling their size like you are.
Well, the non-bank lenders as a category are doing quite well.
Why is that?
Because I think that in general, the banks have been more risk averse to mortgages after sort of what happened during the housing crisis. Whereas I think the non-banks are stepping in.
So there is a risk consideration to this. Even if you're not taking on too much risk, you think that the banks are taking on too little risk?
Yes, I think the banks are taking on too little risk. For example, the FHA loan category is a category that banks have completely stepped out of because of the DOJ risk from many years ago. Whereas we find that there are homeowners who have a 5 to 10% deposit that are perfectly eligible for an FHA.
This is not something that you're unfamiliar with because you were at Citi during the peak years of the financial crisis, and in large part you're credited with helping to turn around Citi during the time when housing and mortgages led to so much trauma for these banks. But when you're looking at the risk that you're willing to take on now aren't you the fastest growing mortgage company in the United States right now?
Yes, in the top 30.
Okay, so when you're willing to take on what banks see as too much risk, what does that mean to you? Does that mean you're willing to look at gig workers who traditionally wouldn't have the applications needed to get a mortgage?
Well, that's part of it, Contessa. I would say that the banks probably stepped back a bit too much. I think the pendulum swung a little bit too much on one side. And I was in those bank boards, so I understand what was the dialogue at the time. Non-banks have actually stepped in and have, you're right, partially gotten into a zone where for gig workers, for example, we are very large suppliers of mortgage in the Seattle area to the Amazon workers, right, who get paid based on restricted stock units. Banks typically don't lend based on restricted stock units. Nothing wrong with that. So we find that we are heavily weighted towards the purchase side of the economy. And we are probably amongst the largest lenders in the country in home purchase as opposed to just refinance.
Do you care whether you're doing refis or doing new mortgages? Does that matter to your bottom line?
It does. Generally speaking, refinancing tends to be extremely interest rate sensitive. So when rates are low, you get a lot of refinancing. Purchase tends to be more linked to the fundamentals of the economy. And what we are seeing in the last quarter, particularly since October, is that purchase has really started picking up. And purchase generally tends to have a what we call lower convexity. In other words, it refinances much lesser and is steadier with better margins.
A bigger picture question for the industry to round things off. To what extent, with all the refinancing that has gone on, with rates so low as they've been, certainly by historical standards in the last year or so, to what extent has refinancing gone on at a fixed rate versus a floating rate? So if we do see rates spike again, will people feel the pressure very quickly or not?
No. So the short answer to your question is that most people refinanced, Wilfred, either to a 15-year or a 30-year. Because, look, at the 30-year, it's at 384 right now. It's a fantastic rate. So most people have actually switched to a fixed. So if rates spiked up, it is unlikely that they will get impacted. However, there's a staggering fact. There's a Morgan Stanley refinancing index. I don't know if you guys are familiar with it. But it says if rates dropped 25 basis points, there's about 56 to 60% of the people that could refinance again. They're in the money.
Sanjeev, thank you so much for joining us.
My pleasure.
Appreciate it.
Thank you, guys.
Still ahead, Jack Dorsey's making a big move. The Twitter and Square CEOs heading to Africa. We'll dig in on the big business impact this could have on his companies after the break.
Ah, Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back of the end zone, Snead. Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round left. Back shoulder fade for Harry in the end zone. Caught it! Touchdown!
Upgrade today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Cutting for the net. Scores! On the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Jack Dorsey certainly boosted the royalties for Toto today, one way or another. Now, Jack Dorsey says he's planning to move to Africa for a few months, but what could that mean for the company he leads? Kate Rooney standing by with a look at how it could impact Square. But first, let's get to Julia Borsim with a look on how it could impact Twitter. Julia.
Well, the continent of Africa is responsible for just a tiny fraction of both Twitter's revenue and its user base. Twitter's average revenue per user in the third quarter in the U.S. was $15.50, while average revenue per international user was just a fifth of that. An eMarketer estimates that Twitter has just over 10 million monthly active users between the Middle East and Africa. That's less than 4% of Twitter's total. Now, when he's in Africa, Dorsey could be as much as 11 hours ahead of Twitter's San Francisco headquarters, so more responsibilities could fall on product lead Kayvon Bagpour, ad chief Matt Darella, and then also lead counsel Vijaya Gadi on regulatory issues, which are sure to be heating up ahead of the election. Guys, back over to you.
All right, so Julia, stick around for a minute. Let's get to Kate Rooney with how Dorsey's move could affect Square. Now, Kate?
Hey, Contessa. So unlike Twitter, Square's not operating in any African countries right now, but analysts are still excited. They say it's the future of payments, and they see the move as forward-thinking by Dorsey. Since the continent is still pretty much cash-based, it could be an opportunity for Square to expand. There's also potential for Bitcoin, which Dorsey mentions in the tweet and has personally advocated for. Dorsey may need to appoint an interim CEO or COO at the very least, depending on how long he's gone. Square declined to comment on that, but analysts say right now there's no heir apparent for Square. Guys?
Okay, well, so first of all, let's take Square. If you have a population that may be, if it's mostly cash, largely unbanked, how would it then work that they would go ahead and be using Square in this way?
It's tough to get financial expansion across borders. So for Square, it's easier for Twitter to expand. In the case of Square, you have to get regulatory licenses. It's not as easy. Part of this is crypto. So Jack Dorsey has been a big advocate of Bitcoin, for example. Those fractional payments and crypto payments cross-border or peer-to-peer are a big opportunity. You see companies like WePay and some of these Chinese peer-to-peer apps go into that market. So analysts have said that because they're underbanked, because a lot of people don't use cash, it's a huge opportunity. But you're right, there is definitely an uphill battle in terms of expanding there and getting some of the infrastructure and some of the payment systems in place to actually be able to use a credit card, for example.
Julia, to what extent is Dorsey personally seen by investors as crucial to Twitter management back here? I mean, if there was an interim CEO or a president and COO who quite clearly was responsible for the day-to-day. Would that placate any criticisms investors might have had about this announcement?
Well, look, Wilf, I think it is worth noting that for years, Dorsey faced criticism for being the CEO of two publicly traded companies. And then both those companies started doing better. Twitter turned around its user numbers, it shifted focus, and it really seemed to be doing better. So that criticism really faded away. Dorsey has focused a lot on the company's earnings calls on the deep bench of executives. There's no one person who's his number two who does everything, but they have people in legal and in product and in advertising who are each handling different parts of the business. So what Twitter would likely say is that they have this sort of diversified deep bench of executives that is right below Dorsey that would all be pitching in if he's not immediately reachable, say 11 hours ahead. But it'll be interesting to see what more details the company gives as this whole plan for him to spend 3 to 6 months in Africa gets closer.
All right, Julia, thank you very much for that. Kate Rooney, thank you as well. Up next, distressed debt could be flashing a warning sign for investors and the market. We'll discuss ahead.
Donald Trump. I used to be a bit of a rubbish sleeper. I'd toss and turn all night, and somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here, testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free selected stores while stocks last. Ends 1st of January.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back of the end zone, Snead. Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round 10. Back shoulder fade for Perry in the end zone. Caught it! Touchdown!
Upgrade today.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Well, it's been a banner year for corporate debt amid a dovish Federal Reserve and a U.S. economy that just keeps growing. But according to a story in the Financial Times, the portion of bonds considered distressed is now the highest it's been since 2016. Joining us now to discuss this is Chris White, who's the CEO of BondClick. Chris, to start off, we just had the president tweeting this hour that manufacturers are being held back by the strong dollar, which is being propped up by ridiculous policies of the Federal Reserve, which is called interest rates and quantitative tightening wrong from the first days of Jay Powell. In your thesis, how important is the Fed and the actions the Fed takes in terms of what we're seeing in the bond market?
Well, the Fed is critical. I think that as we're unwrapping what's happening in this economy, it all kind of links back to the Fed and Fed policy in terms of how the market's reacting. I think this really starts with the policy changes that were put in by the Fed and other central banks post the financial crisis. What's interesting about the comments from the president today is that we're hearing 2 different stories. We're hearing that the U.S. economy has never been better than ever before, and we're also hearing that we need to cut rates. Now, normally, central banking policy, we only cut rates and ease the money supply when we are in a recession or trying to move out of a sluggish period of economic performance. So we can't have both of these things happening at once. So it's a little bit confusing as to, has the policy been wrong, or is the economy not doing as well as what's being reported?
And how does the Fed's actions then take effect in the corporate bond world?
Sure. I think that the Fed and many of the central banks have taken a policy that was an emergency and now made it a part of what they've been doing for the past decade.
So we're addicted.
So, well, I think it even goes beyond addiction. At this point in time, the way the current corporate bond market looks today, twice the size of what it was in 2008, with BBB bonds dominating the outstanding size of the market. It's about 46% of the total outstanding U.S. corporate bond market is made up of BBB. That is all being traced back to the quantitative easing practices put in by the Fed, put in by the ECB, the BOJ, and the Bank of England. And so it's just been this cheap debt cycle that's allowed companies to get really, really massive in terms of their debt capital markets.
So as an investor in this sort of space, do you feel like the valuations are unattractive, that the bonds have been bid up too much? Spreads are also pretty tight, it seems.
Yeah, I think that the way in which the Fed went about this policy probably needs some examination. In order to stimulate the economy, the Fed decided that they would purchase the highest quality debt in the marketplace. So AAA rated securities from corporations and from also sovereign nations. The issue is that that activity has basically pushed down spreads across the credit curve. So now for you and I to get a reasonable return, or for the investors that watch the show to get a reasonable return, you have to invest in companies that are riskier than your appetite. And the worst part is you're not being compensated.
Do you think there's a bond bubble?
I think it's quite obvious that there's a bubble. The indicators that there's a bubble are the fact that there's about $15 trillion in outstanding negative interest rate debt. And this is something that we've never seen before in the marketplace. So I think it's quite clear that from an overall performance standpoint, we're seeing a market that is not representing the fundamentals of the underlying companies.
Chris White, thanks for joining us. Good to see you.
Pleasure.
Up next, Musk's day in court, the Tesla CEO's defamation trial set for tomorrow afternoon. A rundown of the key things to watch for coming up.
The Flock.
Sometimes in business, you have to take risks, but trading across borders and currencies shouldn't be one of them. With Western Union Business Solutions, we can help you manage the risk of doing business internationally. Our valuable experience, expert knowledge, and extensive global network makes us the ideal trusted partner for your business. And with our customer-focused support team, you'll receive a dedicated solution and personalized service. Visit westernunionbusiness.com. Western Union Business Solutions, a global financial network you can trust.
Ah, Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back of the end zone, Snead. Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round 10. Back shoulder fade for Harry in the end zone. Caught it! Touchdown!
Upgrade today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Hey, TuneIn listeners, Steve Kornacki here from NBC News. I want to tell you about a podcast I'm hosting called Article 2, Inside Impeachment. It's dedicated to bringing you the latest developments on the impeachment inquiry into President Trump. Every Monday, Wednesday, and Friday, I talk to NBC News reporters who are closest to the story to break down what's new, what matters, and what it means for the 2020 election. Search and favorite Article 2, Inside Impeachment on TuneIn.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Welcome back. Let's let's get back to Mike for the final installment of today's dashboard. Mike.
Well, insulation against tougher consumer conditions, financial conditions, comes in part in the form of this wealth cushion that has built up in this economy. We have a good chart from Citi here that shows the growth in wealth, household wealth, over a very long period of time. This goes back basically 50 years. So this is real estate wealth. This is net housing wealth. You can see very gradual increase, really not that far above where we were 15 or so years ago. That's been an old story, right? Housing has not just barely come back from the slump. But what you see here is net worth ex real estate in blue. It has exploded. That is almost entirely in the form of equities, public and private equities. Now, the thing about equities is 90% of all stocks are owned by the top 20% of earners, of earning households. Now, look at the distribution of consumer spending by percentile of earnings. You see the top 20% of earners, that's right here, they're responsible for just about 40% of all consumer spending. So twice as the representation in the spending column. So therefore, the fate of that wealth, of the equity wealth, and just exactly how these consumers feel about it is pretty important in driving overall consumer spending. The rest of the economy, of course, the distribution is pretty steady in terms of those people, their pace of spending. That's why last December, when we had that big downdraft in the stock market, it did seem to have an impact on retail spending. This year, we're at highs. We'll see if that improves the mood at the top end, but it shows you the wealth dependency to some degree of consumer trends.
I mean, that first chart is fascinating. I don't know if we can go back to it. And actually, I think if you looked at that in other parts of the developed world, Europe in particular, UK in particular, it wouldn't show that at all because housing is so much more at a shortage and house prices have exploded higher over the last 3 or 4 decades in a way that, relatively speaking to stock prices on your chart, doesn't show that.
And equity valuations, of course, are not where they are here.
I guess the only thing that, whether or not it comes out through a blue line or an orange line, if it comes out on either line, it is actually kind of an argument for why capital gains should be taxed a little bit more. Because it's had such a big impact.
There is a tremendous pile of untaxed, accumulated equity wealth out there, and I think all the politicians see that and are trying their various ways of getting at it.
Yeah. Mike, thank you.
Up next, Ice Baby Yoda. The Mandalorian fans can now order a Baby Yoda Frappuccino from the Starbucks secret menu. Wait until I tell you or sing you these details, unless the lawyers call and tell me to knock it off. A taste test when closing bell returns.
With the bass kicked in and the Vegas all pumping. Quick to the point, no faking. Cooking in.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free, selected stores while stocks last, ends 1st of January.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back of the end zone, Snead. Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round 10. Back shoulder fade for Harry in the end zone. Caught it! Touchdown!
Upgrade today. Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
In the stock market and in life, everything can change from one minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk